Hi, everyone, and welcome to this interview around our Future Digital Awards here at Juniper Research. I've got the absolute pleasure today of being joined by Miles Paschini, who is CEO at FV Bank, who won one of our awards relating to digital currency innovation. Thanks for joining us today, Miles.
Thanks for having me on. It's my pleasure.
Brilliant. So let's talk about, firstly, the key trends and shifts you're seeing in the digital currency market. What are some of those changes you're seeing at the moment, and how are they impacting the market?
Yeah, I think that at the top level, there's a macro wins, I'll call them, about regulatory clarity. We're starting to see that with the Genius Act in the U.S. and I'll call it the battle of the banks and the digital asset native folks with regards to the Clarity Act that's going on now. But in the end, we do expect that the U.S. will have strong regulatory guidance, and that's bringing comfort to a lot of financial institutions that were historically on the sidelines. We see a lot of banks now thinking about how do they integrate crypto or stablecoins into their business. I think really the first wave that you're seeing is strong adoption or interest in stablecoins. And so this is really where I think you'll see maybe the next 6 to 12 months, there'll be deepening integration and support for stablecoin activity. And then as the Clarity Act comes around, I'm quite sure that you'll see many large, medium, small institutions attempting to get involved in somehow integrating, because I think that if they don't, it's going to put them at a very steep competitive disadvantage if they don't figure out how to somehow integrate and provide their customers with access to the benefits of digital assets.
Yeah, I think that makes sense. From our point of view, we're seeing a lot of the same shifts on our side. We're seeing that stablecoins are really becoming viable payment methods in a way that some mainstream cryptos haven't managed to date. So we're actually starting to see the sort of merge of sort of Web3 and sort of new types of finance merging with traditional finance. And that's really having a massive impact so far in the market. We're seeing a lot of interest in on-ramps and off-ramps, which I think is going to be hugely important, and a lot of interest in specific use cases we're seeing in our side. So cross-border being the obvious one, where cross-border payments have not exactly been efficient over many years. So we're seeing a lot of interest in the cross-border payments piece, but also in some interesting use cases. For example, worker payouts across borders has been a real challenge for businesses, and how to do that effectively for some time. And that's something we're seeing a lot of interest in on our side as an analyst house. And I think you're absolutely right in terms of it's not just the sort of big banks seeking to get involved and see how they can get into this ecosystem. It'll be all kinds of players within the fintech and payments and banking ecosystems. So lots of progress being made in a very, very vibrant market at the moment, I think.
Yeah, I think there's some use cases that have already become solidified that as very viable. For example, institutional settlement or FI to FI settlement is a great use case. We've been doing this at FV Bank for a couple of years now, where we're using stablecoins as a settlement rail between other financial institutions. You're also seeing, when you talked about the remittance space, there are variations of that. So we used to talk a lot about last mile. In stablecoins, you're seeing stablecoins playing a role in the first mile, which is the settlement layer. Let's say from the originating institution providing liquidity to the last mile institution, and vice versa. So we see a lot of local currency, let's say coming from Latin America, that wants to make its way to the U.S. market. And so going from, let's say, Argentinian pesos to U.S. dollars, it's much more efficient to go from Argentinian pesos to a stablecoin than it is to use a traditional bank-driven FX process. So the use cases are emerging in what I would call flows. And different participants are looking for alpha in different directions. And that's really where we're trying to play our role, is that the Venn diagram between the support of digital assets, in particular stablecoins and traditional banking, and how do you create use cases that resonate with people who need access to those use cases?
Makes complete sense. And to pivot to the next part of our discussion, I think the extremely valuable role that FV Bank plays in that overlap in that Venn diagram, as you discussed, is actually one of the key reasons why Juniper Research selected FV Bank's new stablecoin features as being worthy of our Platinum Award for Digital Currency Innovation. We see the progress you're making. We see that you're playing quite an early role, and you've been an early mover in that space and actually developed some really important capabilities. And that was really well received by our judging panel in terms of the innovation that you have in that way. And this, you mentioned it here, the ability to convert those different currencies and actually integrate with those sort of TradFi rails. That is hugely impressive to us and was a key reason why FV Bank was selected as the Platinum Award winner for digital currency innovation. From your side, what do you see what makes FV Bank's approach so compelling within this space? What is that sort of secret ingredient or special sauce on your side that makes this all work?
Yeah, I think first and foremost is that we're a bank, we're a licensed depository institution who have adopted these types of solutions. And I'll give you an example. You mentioned the term stablecoin sandwich, which is somewhat of a new term maybe in the last year that the industry has been using. It essentially tries to depict like three parties, one end being one piece of bread, the other end being the other piece of bread, and something in the middle, which is typically a bank clearing those transactions, or an FX house, if you will. And so the way that we're looking at the market is that the stablecoin sandwich for us is very thin because we are the layer in the middle. And being a bank, we don't need to have this extra leg, which is typically stablecoin, some conversion to a fiat currency, and then a transmission to, let's say, a beneficiary, which may be in a stablecoin, it may be a foreign currency. We collapse all of that. And the way that we achieved that early on was we integrated wallets directly to our DDAs. We didn't treat it like a three-part solution. We treated it as an atomic solution. So if you have let's say, a USD account with us, and you receive a deposit of stablecoin, it's atomically converted to dollars in a depository institution. So our user doesn't need to own a wallet. They don't need to have any type of liquidity relationship or FX relationship. It's just built in. And I think this will be the way that you bank in the future. If you think about, let's say you have an account. I have an account which has a wallet associated with it, and you have an account with a wallet associated at your institution. Now we can transfer value between institutions using blockchain versus using ACH or Fedwire or Swift. And so what we're hoping is other banks integrate the strategy that we did, and then it becomes really an FI to FI settlement on chain. Today, it's very much hybrid for us. Our customers have some involvement in digital assets because they're either receiving digital assets into their accounts, or they're sending digital assets out from their account. But we see a future where a counterparty will have a bank that has wallet addresses associated, and there'll be this kind of, it's not really peer-to-peer, but institution-to-institution settlement directly on chain. And that's going to be a very exciting time.
Absolutely. Sounds great, and I think it's really impressive as sort of an observer in this space to see the rate at which things are changing. The pace of the business models that are developing in this space is really impressive, and I think it was our opinion that FV Bank were well positioned in that regard. So I think you guys are well set up for the future of this market.
Thank you. Yeah, we appreciate that. And we're not done. We continue to work on a roadmap that pushes the boundaries. We're looking now at, or we're launching solutions. For example, we just launched what we call a stablecoin invoicing. So directly from your bank account, you can raise an invoice that can be settled in stablecoins. Great for international commerce, where let's say that you're a buyer from an overseas market. Normally you would make a purchase order, and you would send funds to have that purchase order shipped, it might take 1 to 3 days for the funds to arrive. In the paradigm that we've created, you can create an invoice to a buyer. They can settle it instantly with stablecoin. The funds land in your bank, and you can ship same day, right? Same hour. So we're trying to find these use cases that will resonate with international trade. And we're working very much now on agentic commerce solutions as well. We see that there's going to be significant opportunity for agentic commerce to take place, not in some obscure product, but in a very solidly rooted financial product. And so we've been developing products that will allow agentic commerce to take place directly with the bank, and we think that's extremely exciting.
Absolutely. We could talk all day about these developments, and I know I, for one, am hugely excited about what's to come on the roadmap, but that's all we have time for today. So all that's left for me to say is congratulations once again on the win. Fantastic achievement for FV Bank, and thank you very much for your insights today. It's been brilliant.
Thank you again. We appreciate the recognition, and we're going to keep working to become better.
Thanks very much.
Thank you.